All right. Can you hear me now? Can you guys hear me now? I think sorted out. I was just explaining why I was late. I apologize. Having to look after my boys today, this week, and do some homeschooling while working the markets at the same time. It's an interesting double duty, but it is what it is. Okay, so hopefully you guys can hear me, and I apologize for the issues. Let me know. Good. Awesome. Cool. Right. So let us share this screen. For those of you coming in again, I just apologize for the delay. It's been an interesting morning. Something came up last minute, but it is handled now. So we're just going to put my chart on the screen. And I was apologizing that you didn't get to hear the music you guys love. But I didn't think there was time for that, seeing as we lost about 15 minutes already. Right. So okay. This is not, I'm not in 1 second. This seems to be the morning where anything that can go wrong is going wrong. Okay. Right. What is happening here? Okay, we got it now. Cool. We got it. Belatedly. Cool. So, this will be an interesting video when it's up on YouTube for those of you in the student section. When we might have to go chop off the beginning. So here it is. We looked at this yesterday, the dollar index, what we think is happening / will happen. Let's get rid of all these lines. So Tuesday is actually going to form at the moment. Let's get rid of all these lines so we can start fresh. Come on, get off. I'm beginning to think I might switch to Trading View just while I'm doing the webinars. I still trade with MetaTrader because it's a lot easier to annotate and teach with. Anyway, so these are scenarios we're stalking going into the week, right? Prices right now in a weekly order block. There's a level there. Right. Okay. Well, we can't check pips and dollar index. So we're either going to see a reversal in here or down there, or price will use one of those two zones to drop even further to down here. On a macro picture, that's what we are looking to see. You drop down to a daily chart with those three levels still annotated. If my MetaTrader will behave itself. So you drop down to a daily chart. Now, do not be fooled, gents and ladies. This up move here, Corinne, to answer your question again from yesterday, while this is forming, the temptation is to see that as a potential order block being formed, and it very well could be. We will not know till price pushes up above that candle there. And so until that happens, we just are going to assume that that's going to be a drop. If that's going to happen, then on an hour chart, spread this out. Right. So on an hour chart, that's the level we need to get to. Right. We need to get to this level up here before we start being bullish on the dollar. So, and there's this one down here as well. While price holds beneath there, we are tempted to see this. Again, we're not trading it yet, but we're tempted to see this just as a rally beneath above the open of the day to find support. In which case, that would be the support there. This would be the support here. To find support there. And then to drop. To drop to where? Well, there's no previous day's low anytime recently, but we do have this level here. And so my first option is still for that to happen, because we've seen a 1 hour engulfing on there. So that's still my first option, for that to at least break this level here. Well, it's already drawn already. If that holds and this green level here breaks, if price breaks up here, then I'm going to watch here. If it closes above here today, say for instance it does this today or tomorrow, anytime. If it does this, so this will be a green candle because it's a bullish candle. If it were to do this today and close above this level here, then I now start looking for a long-term buy profile or buy system. So as long as, now I understand that for new traders, it's a bit difficult, because I used to think this way. When you see price standing at the bottom of your screen and you see it's been coming down for so long, the temptation is to think it can't possibly go down much further. So once it puts in this low here, the temptation is to think, okay, finally it's reversed. No, because if you look at where you are in the bigger picture, right, which is what a market maker is looking at, in the bigger picture, you are still quite far from the low of this weekly controlling range. So you're just here. Now you're in prime position for a buy. You're in discount. You're beneath the 38.2, but there's still plenty of price action down here. So because you are in a position for a buy on a weekly basis, you're not going to jump into the first hourly signal you see. This could simply be setting up for manipulation here. That could be setting up there for manipulation. And then pushing up to see the real reversal. So this is difficult. And even I fall for the one. I don't fall for it in terms of taking the trade, but even I fall into the trap of waiting around for the reversal so long that you miss trades still going further down. So with that in mind, in addition to what we looked at yesterday, let's look at what some of the pairs are doing also. For the newbies among us, I was thinking about what to do with this session that would really give you a leg up on some stuff. And I'm actually going to give you a demo system. Promise me you will not take this in a live account. All right. But I want to show you a scalping system that I want you to start to practice with. The success rate is not going to be too high. It should be about 60%, 55 to 60%. But it'll start to get you in the habit of analyzing and anticipating price in a way that will give you high rewards when you start applying it to higher time frame analysis. But I want to give it to you on a scalping basis so that you can get several entries over the next few weeks to kind of figure out how it works. So with no further ado, let's look at the majors. Right. So I'm going to start with a brand new chart for this one. I'm not sure what my screen's doing. Everything's just okay. There we go. Things just messed up today. So let's start with a brand new chart for this. Where's your USD? Let's pop that in here. Well, okay, we can do GU. So in essence, our bias is still long on GU until the reversal has been put in correctly. Having said that, so in essence, the reversal would be, if we go back to GU the same way we looked at it here. Now, GU is a bit interesting because on a daily chart here, that's been taken out. Right now, where do I think the controlling liquidity profile is? I use the word think. I might be wrong. I think it's this one. I might be wrong, but I think it's this one right here. There's a couple in the same range. There's a manipulation block somewhere there, but I think this is the one I really got my eye on. Right? So it's this bullish order block from here. One price runs through, it becomes a manipulation block, comes back down, touches it, comes back in on the same day, runs away, and it's not been back since. So I am kind of looking for price to get here and then potentially short. That's my bias or my preference. Doesn't necessarily have to be the case. If I drop down the 4-hour chart, now I want you to look at this. This is how market makers get people in trouble. Can you guys just let me know you're still tracking with me in the comment section, just to be sure I haven't lost you? So this is how market makers get people in trouble. If this analysis is correct, again, you form a scenario, you wait for a signal, then you have an entry pattern or an entry system. So if this is my scenario here, right? Can you see how what is happening right now would be a perfect manipulation? Can you see how this will be a perfect manipulation? Look at this. If price is really going to run up into this area and then short, we have 3 4-hour candles that are pretty much equivalent. See, this would be textbook manipulation, right? For that to happen, a push down. There are several breakout traders who on this bearish candle here are already in the market. I can guarantee you, and maybe some of you are on your demo account right now listening to me, right? I would not be surprised if someone somewhere has already put in a sell order looking to catch this move down. And it may yet work out to be true. But this is the way I want you guys to begin to think, right? As what we call smart money traders. And even if you're watching this, on repeat afterwards, if we choose to put it up on YouTube, why take this trade? At best, this is a 50-50 proposition. First of all, it is crouching underneath an order block there. There's a liquidity profile here. It's not reached. Secondly, no one has been punished yet for being wrong here. Now, the argument you could make, which I see, is that this is a 4-hour high here. I know it's not obvious to an untrained eye, but that is a 4-hour swing high. Why? That's a candle. The candle to the right is lower. The candle to the left is lower. So when that was forming, right? And that was forming, let's see if I can. All right. When this was forming here, it would have looked like a classic high, right? So the argument is the price has tagged this high up there and this reversed through it. So if you were just going to trade it vanilla off, one second, I mean, insert the pre-order tool there. Right. Where's the pre-order tool? Down there. Cool. Let's put that in. Ooh. Also an interesting week for me because I am quote unquote on leave from my quote unquote other job, I should say businesses. Well, a business is still a job if you work it. The only thing I'm doing this week, other than playing with my kids and chilling and spending time with my family and just, lazing around, is trading. So it's kind of messing with my, 1 second. It's kind of messing with my cadence because the rest of my schedule or my routine is not there. But anyway, that doesn't seem to want to work. So you put an entry here, you'd put a stop loss there, and then you look for this levels there. That's fair. However, this is where experience comes in. That so-called 4-hour high one did not line up with a daily high. 2, there is this daily liquidity profile here that we are just short of. And you can see price created this. This is a classic IKW pattern, right? This is my personal bread and butter. I've been alluding to it in the charts up until now, but I don't think I've taken the time to really show it to you. And that perhaps today is not the right day for that. But you see this, right? This here was a daily 1, 2, 3, 4. That was a valid daily swing high, right? It was confirmed. When that formed, and this is the scalping system I'm showing you here, but I'm showing it to you on a higher time frame first to see how it controls price. Hold on a quick second, guys. Sorry, the boys, the twins, as I call them. So I'm showing it to you. There's about 10, 16 months between them. I'm showing it to you on a higher time frame to show you how it controls price action. When you drop the same principle down to a lower time frame, you get far more signals that are far less reliable. But I want you to begin to figure this out on a lower time frame so that when you get it, when you figure it out, when you can see it develop in real time, and you come back to it on a 4-hour or daily time frame, you've got all the pieces of the concept you need. So I want you to look at this as it would have formed in real time. Just think back to January, February, right? You would have seen this happen. So a short from here to there, a retracement back here, Then you'd have moved your fib, right? Another short to here, another retracement back there, excuse me. Then you would have moved your fib again, a short from there to there, another retracement back here, and then finally, you would have moved your fib from here, and you would have been looking to there. You would have been looking for a retracement. Say yes if you see that. So as that when this was forming, you would have seen that as a swing low. You're currently in a bearish downswing, right? A downswing, a bearish swing, or series of swings. And so you would have been looking for a retracement to print here. This is how, even when you lose a trade, if you're not too emotional, if you haven't put too much of your feelings into it, if you didn't put your rent on the line, if you didn't put your children's lunch money on the line, if you didn't over risk and over leverage, if you can stay emotionally dispassionate, even your losses can set you up for big wins later. Because first of all, I would have seen no reason to take this trade here. There was no reaction, right? On a daily chart, there was absolutely nothing on a daily chart to tell you to take a short there. But even if you did, and that was violated, right? And then soon after, see, it cleans up this level here of liquidity. So it cleans up that one. Then it cleans up this one. Come on. And it runs into this order block right here. It runs into this order block right there. Right? Barely. Cool. Then you would have expected, you would have said, okay, that's a 1. This is, you would have then told yourself, this is the one right here, right? I really need you guys to see this with me. Like I said, this is one of my personal signatures. If you go back and look at half the signals I give that are almost pip spot on, this is what you see happen. You would have said that was a 1. This was a 2 right here. So stop loss, stop hunt, market structure break. You would have put your fib here. And again, you would have been hunting a retracement long, right? You would have been looking for a discount retracement and then for price to rally. Are you guys with me? Let me know in the comment section. It's awful quiet. Come on. All right. So, and then again, you would have been burnt. Because rather than it giving you a discount retracement to go long, it would have dropped on you again. Ladies and gentlemen, when you see that happen, you have one of the most powerful tools in the Forex market, especially when this happens on a higher time frame. If this happens on a 4-hour or so a daily and above, it's powerful. What you have then delineated is a manipulation zone. And this is why I call it a manipulation zone. This same order block here, this order block, or this bullish candle there, let me zoom into it so you can see it. This bullish candle here, right? This one here would have tricked some people into a down move, thinking this was a further downswing. They would have been expecting a retracement in it and then going, and it blew through it. What does AKSL mean? Sorry, I'm not with the lingo. Can you break that down for me, Kieran? What does AKSL mean? So And then on the way down, this one here, one second, this one here would have done the same thing. In essence, you'd have said, okay, then this is the order block. So this has happened, right? Cool. Now, I want to draw this out in time for you. Draw these two zones out in time for you. I want you to see the beauty of them. So this is manipulation zone 1. That's fine, Kieran. Just let me know what you meant to type. Let's put in some text. So I'm going to call this manipulation zone 1. And manipulation zone 2. Now, I know this is a daily, but it happens on all time frames. The higher the time frame, the more reliable the signal. Look at what happened the first time price tagged manipulation zone 2. Look at that. You can see that there is a significant reaction. However, we do not see, and so also you would say here that there was then a daily market structure break there. Look at that. Because MetaTrader, you're trying to get replaced by Trading Zone, aren't you? Or Trading View. Carry on like this and I will replace you quick, fast, and in a hurry. Yeah, stop loss, definitely. You would have put a stop loss there, hopefully. So this is a swing high. Again, it's hard to see on a day on a chart if you're not, but that's a candle above. So there you get a re-entry and then a trade. However, when this happens, so if this happens here, this is how you know which of these zones is the real one to take. First of all, you can take a trade here real easy. Just be careful when you take this trade because you are looking at this level here. This is the controlling low that drove price up there. So when you take this trade, the first from the lower of the two zones, if price breaks and closes beneath this level here, it will probably tap into it on a retracement. This is how what they call them again now for trend line break systems, retests. So they call them retests. Well, this is how retests really work. Retests don't work on horizontal trend lines. They work on defined market maker levels. You'd see that and then you'd go. Powerful move. If that happens, you are pretty much almost guaranteed to get down to at least this level there. And as you can see, if you've been a swing trader, if you've taken an order from here, let's say you took it on this here, it came back, you took the order in here when it closed. If you put your stop loss there, that's 200 pips. That's a lot, but still, that would give you pretty much 6-1. But if this doesn't happen and price starts to go back up, well, think of it this way. You now have some intermediate liquidity. And this is this is something I noticed myself in marketplace. I didn't learn this from anybody. Nobody showed me this. This was just painful losses and pain and study. But when that happens, you then have intermediate liquidity. And many times this is what you see. The lower, if it's a short, so if it's a short, manipulation zone 1 is above, 2 is beneath. If it's a long, it's the other way around. Then 1 is the lower one, 2 is the higher one. In essence, 1 is the first one that happens. 2 is the second one that happens. You then see that this here has now created intermediate liquidity for this one there. In essence, this has now created some short-term orders. Somebody would have had their stop loss here. If they were selling, their stop loss would be a buy. If the market maker wants to sell up here, they would pair their sell with this person's buy stop loss and then take the real trade they want to, which is a short from there. And then then they would also now have liquidity beneath here. So they've built up a range where you will have orders here and orders here that allows them in both cases to tap into, to come down to usually around this level here. I want to build this very carefully. Do you get this so far? Are you with me? If not, I will take off all the markers from the charts and start again because I want you to see this. So let me know in the comment section. If you're a registered student, let me know in the comment section. And I will, if one of you says you don't see it, I will start again. Because this may be somebody's bread and butter setup. Let me know. Let me look at my live feed, not the broadcast feed. That one's a bit delayed today. Let's look at the live feed. Do you get that so far? Let me know, folks. Let me know. If not, I'll go over it again. Don't worry. I got time today. Before I go any further, do you see how these two zones have set up orders on both sides of the marketplace? Let me know. All right. I'm going to assume. You know what? No, I am not going to assume. Let me run through this one more time. One more time. With a brand new chart. I want you to see this. Like I said, this could be somebody's bread and butter setup. This could be someone's candy land. So let's start from scratch. All right. I'm showing it to you on a daily because I'm going to teach you to look for it on a 15-minute chart or even a 5-minute chart. You'll see the same thing happens 15 and 5 minutes. Now, you can't always trust those signals, but for now, I just want you to get used to the setup. So don't trade the 15 and 5-minute one in a live account unless you really know what you're doing. So let's start again. Daily chart, right? This is the GU. This push up took out at least one level of liquidity. In this case, it was 2. Took out that one there. And also this one. This one here. It looked like a 1. So the one there. Now, before it did that, on the downside, it took out this one here. When this was forming in real time, this is what you would have seen in real time. You would have seen price making lower lows and lower highs, looking like it was in a classic sell program, sell system, sell profile, whatever you call it. Low, lower low. So it's trending lower, right? You would be forgiving for thinking this was going to make a retracement and then go lower. It did. Then it turned around and broke market structure to the upside. That looks like our classic 1-2 pattern, 1-2-3 pattern, doesn't it? It looks like this is the one. This is a stop hunt. So 1 equals stop hunt. It then looks like this is the 2. This is the 2, which by our system would be the market structure break. We would then be looking normally for a 3. 1 second. Let me show what's up with my system today. You would then be looking for a 3 to print in between this. So let's take this one off. Let's assume that we took this, the higher one. As a market structure break. We'd be looking for a reversal somewhere here to go further long. But no, it just drops through it. In essence, we have worked 2 sides of a range. There was a stop hunt here and a stop hunt there. Arrows on the candles. Okay. Okay, I'll do that. But before we get to the candles, can you see that there is a stop hunt here? You know, I quit with MetaTrader today. There's a stop hunt there and another one there. Let me know if you can see that so far. There are 2. So we've seen the market work both sides of an area and generate liquidity on either side. Please, everybody, type in the comment section. Let me know you can see it. If I don't see you type, I'm not going to assume you can. So there's been a stop hunt here and a stop hunt here. It's worked both sides simultaneously. Can you see that, everybody, please? That there means that this level here, this level right here, is what I call a manipulation zone. Right? Is what I call a manipulation. Yeah, Kieran, you're right. I feel this is quicker and then it just slows me down. So if this worked correctly, it should be quicker. And I think I'll just draw it quicker and then it takes forever because the lines are not lining up. So yeah, my fault. This is what you call a manipulation zone. Now, first of all, the easy way to do this, right, is just take this entire zone and stretch it out, right? And wait for price to revisit it. That's the first way you can trade this. In which case I'd be looking for a daily and a bearish daily engulfing here. And if that were to happen, I'd be looking for it to then at least challenge, if not run through, at least challenge this liquidity profile down there. So if you don't like complex stuff, just do it that way. Draw out that zone from here to here, right? Usually you will see price do this roughly about the middle of that zone. Somewhere there will be the middle. And then just wait for a reaction there. You see, we're primed for one if it does hold up. However, so when I first started trading this way, this was the first thing I noticed. These are what I call pivot levels. You can see them in price all through. If you go back time, you see them pivot levels, right? Where if you draw a line around the middle here, it would be a pivot level. Price works it this way and then that way. But as I began to study it further and take a few losses trying to refine this, I noticed something very interesting, a very interesting phenomenon. It was that there are two particular order blocks or candle profiles, whatever you call them, that jump out. This is the first one here. One second. This one here. Why? It's the order block that drove price into the first manipulation. It's the one right there that caused this. In essence, at the time, we were thinking that this was a simple bearish order block. You know what? Let me do it this way. I'm afraid I'm gonna. Right, there we go. This one here. That candle over there. When that was forming, can you see how that would have looked like a classic bearish order block? It's just retracement, premium retracement on a downswing, and then you'd have expected to go further. So when it put in this low here, you'd have expected a retracement and therefore it to go down again. So that's the first candle you're interested in. It manipulated you into thinking price was going further down, and then price passed through it on the way up. Even if this just kept going further up, this would still be a manipulation zone. In essence, when price came back to it, we would have expected it to hold it and then carry on going up again. But we had a double manipulation. It went one way, tagged the stop loss or the stop hunt, sorry, and then did that on the other side. Now, when this happens, coming back, you think that's normal. You'd expect price to find support between those two levels and then push up. It does not. It clears it out the other way. At that point, there is another candle that we're interested in. It's this one here. One second. Let me just borrow that. So I know it's the same length. This candle here. Let's get rid of this. It's not as common as a simple manipulation, Kieran, but it's still quite common. It's quite common. It's more common than you would think. This one right here. Because again, when that was forming, you would have thought, okay, that's now your bullish order block. Price is going to keep driving, find a retracement and drive again. you now have two manipulation zones. Right, gents, ladies, fellas, gals, girls, guys, you now have two manipulation zones. We're going to call them manipulation zone 1 and 1 second, there should be a space between manipulation and zone. Manipulation zone 1 and manipulation zone 2. Which one is 1? Which one is 2? 1 is the first one that happened. 2 is the second one that happened, in that order. So if this were reversed, if this chart was upside down, then the manipulation zone 1 would be the lower zone, because that's the zone that would first have driven the stop hunt down. Then manipulation zone 2 would have been the one that went the other way. The first thing you do is, you'll also see that if you remember my definition of a fair value gap, that's also a fair value gap there. When price comes through here, it blows through it and it's never touched it back. So that's also a fair value gap. This is how our liquidity profiles we call them confluences or convergences, when you see one or more liquidity profile around the same area. So if you're going to trade this system, this pattern, go to sleep till price comes back to manipulation zone 2. If you're trading a daily chart, right, you have 1, 2, 3, 4, 5. I mean, you got the better part of 3 months before you need to do anything. 4 months before you need to do anything. Go on holiday, take a vacation, whatever. That's why I'm going to show you how to do it on a lower time frame, because you're going to get far more signals that way. When price, now don't be tempted. The market maker, well, Kieran, we would not have put in an order anyway if we were smart traders, because we would have waited for a reaction and we would not have gotten one. So there is no reason. Why is my computer doing this today? There is no reason why a smart trader should have taken any of those two trades. They're there for the uninitiated. They're there for the trend line break artists. Let me give you an example. If you drew this trend line here, this is how they really mess you up, how they really beat you up. If you drew a trend line here, right, and say, let's jump down to 4, you would really see this on a 4-hour chart. There you go. Let's get rid of that. Can you see how this would have been a classic so-called trend line break? Actually, no, so that's not what I'm looking for. This one here. Because that one would really have been a trend line break, yes. So this here would have been a classic trend line break, right? Some manipulation. The same way the other way. So you would have said this is a trend line break here, in which case you would have put in your stop loss or your Fibonacci there. You'd have been waiting for retracement here, right? And then it would have failed. But on a daily chart, there is no reason why you should have entered that trade. None. because you did not get a daily reversal. Remember, you trade with a daily bias on anything beneath a daily chart. You did not get a daily reversal. That's why I say wait for the daily reversal before you go long on the shorter time frames. Anyway, your first decision is when you get back to manipulation zone 2. First of all, you do get a daily reversal here, right? There is a daily engulfing there, right? Also, there is a short-term daily low there. I'm going to borrow those arrows and duplicate them. MetaTrader, will you just behave yourself today? So let's borrow these arrows. Here is the low, the short-term low I'm talking about. And here is the engulfing I'm talking about. Right? You see that? Cool. Now, we don't know what's going on here. Powerful signals that tell us we're going short. In essence, you could have entered here or seen this engulfing, waited for the next day to retrace, entered some, maybe here, maybe at that line, exactly that line there. Put your stop loss there. And then been looking for these lows here. That would have been a 500 pip trade. Not bad. However, and that happens a lot. You will see that happen quite a lot, right? And then it'll come for here. Great. If it passes here, if it breaks structure with the controlling low that drove the reversal into manipulation zone 2, if price closes beneath here, right, then look for this pattern. Look for this pattern using that zone. And get short. That's the simpler of the two possible scenarios for this principle. However, if it does not get there, you see here, it doesn't reach that level. Now, it could have come up a little bit, found resistance here, and then kept going down. That's fine. But if this happens, you need to start. I'll answer that question in a second, Kieran. If this starts to happen, come back here. Come back and watch for this. Because then all the market maker has done is use manipulation zone 2 to form intermediate liquidity for manipulation zone 1. Let me know in the comment section if you can see that. So the same way, these two highs here were used to form liquidity to get to manipulation zone 2. If they don't get all the orders they want, if they don't have all the liquidity they want to push, they'll just use manipulation zone 2. We call it to unwind in trading. They had orders in there that took them up. They're going to unwind them going down. But if they don't break that structure, it means they're coming back half the time or a lot of the time for manipulation zone 1. In which case, you want to see manipulation zone 2 be taken as intermediate liquidity. And then you now look for another reversal up here. So you could technically get to bites at the cherry, if you want to put it that way. Now, Kieran says, considering manipulation zone 1 is there, will it still be a good trade? Well, this is why I said this works best on higher time frames. Because when you see a daily engulfing, it is a sign that at least for a while, price will continue going that way. Not always, but often. So if you did this on a 15-minute chart, you would have several false signals. On a daily chart, they're going to be far less false signals, right? They're going to be far less false signals. Entry 1, keep your eye on this level here. In fact, when you take entry 1, I would always say get out just before this here, meaning exit the trade here. Exit the trade here, just above this level. Be looking to exit above this level, like that would have been perfect. And if it breaks the level, re-enter when it retests it. That way, if there's no zone 1 return, you don't lose out. But if you see this happen, then you can be very, very, in fact, let me take this line away. If you see this happen, you can actually have another 1, 2, 3, and 4. Where do you know the 4 is going? You know that 4 is coming for manipulation zone 1 because you've kept your eye on it. Now, because this is a daily chart, the zones form in 1 month. You get your first entry, so zones from this month. You get your first entry, the second, third, fourth. So you get your first entry 4 months from the zones forming. And then you get your second, well, you can get a trade going back to the higher level here on the 5th month. And then the full drop, if it works out that way, it may not. The full drop on the 6th month, still on the 5th month. I want you for a second to ignore that daily time frame up there. Imagine this was a 15-minute chart. Just imagine for a second that this was a 15-minute chart. It means this would form on a Monday, Tuesday, Wednesday. Your first entry would be on the Thursday, and your second entry on a Friday. Maybe 2 entries on a Friday. Think about that. This pattern could give you, because price is a fractal, it works the same way on all time frames. This pattern could give you 3 entries a week. To be safe, maybe 2, at least 1. But you have to be able to track it in real time. Yep. Kevin, you got it. That's right. Now, you don't need to be able to see the manipulation zones form in real time. This is the beauty of trading with institutional order flow. You just need to be able to notice them after they have formed. While they're forming, you don't need to know they're forming. But once they formed, right? Let's assume this was a 15-minute chart. This means they would form this day. They'd form on this day. By the next day, this one here, can you look back? Do you think you could look back and spot that? I think so. I don't see why not. Then you just wait. Simple. You just wait. Open a separate chart draw them out, and don't touch that chart. Check that chart every day to see what's going on until they return. Or go on, open up all 27 cross pairs, including the majors, and look and see which chart, which pair currently has price near a manipulation zone. And then wait. Now let's try and look. Let me see now, because this it occurred to me to show you this literally half an hour before I jumped on, so I haven't had the chance to look for it. Let me see if I can find one on a lower time frame to show you the same thing. Right. Let me see now. I can show you this on a lower time frame. And let me show it to you bullishly now, because I showed you that one bearishly. Well, first of all, let me just show you a simple one manipulation system, because that's a double one. Look at this right here. See that candle right there? This one. This one here. Bearish engulfing to form, I would say so, yes. You don't have to. I would. Just me. I would wait. So, see this here, right? That at the time it's forming, that looks like a bearish order block. Price then drives through it. In this case, it doesn't do the double manipulation, just a simple one-sided manipulation. Right? Just go stalk it on the downside. Just go stalk it on the downside. And make sure you have intermediate liquidity on the way down. Right? That's intermediate liquidity. As you can see, this is the Asian range. That's the beginning of the day. That would be your daily open price, right? So you see, this all works perfectly. Put that in blue, because when 1 hour lower chart, blue, make that. Because it's a daily open, let's give it a particular color. Actually, it's fine. Let's leave it like that. So can you see how this open, low, high, close, this perfect daily profile is using that exact principle? There's your intermediate liquidity. There's your intermediate liquidity. But it all started with this manipulation zone there. So that's a one-way system. It comes back, it gives you a reaction. you take a trade. Look at all that you could have got to the upside. This happened the very next day. It comes back again, as you will see in the future. This time it violates it and comes back down to the original order block that started the move. In that case, this is now your intermediate liquidity. But as you can see, the first touch gives you a trade, right? Also, give me a quick second. When you see this happen here, you would have been forgiven for thinking this was another down trade. But this also was a manipulation. So you have manipulation zone 1, manipulation zone 2. It comes to the higher one, you take a trade. In this case, it broke this structure here. So we could trust it for a while longer. Since it broke that structure there, we're looking for, let's see, what would we have been looking at? We would have been looking at this here. Since it broke, so it broke this structure here. The next higher frame high would have been here. Would have been there. And as you can see, that's where it was held. When it's coming back down, on its way back down, you expect it to go for the next level there. You may be wrong, but you expect it to go for the next level there, using this level as intermediate liquidity. That happens, you get a sharp reaction, then you then expect it to clear that one this time, because that's where it held up the first time. It came back down for some more juice, and now you expect it to blast through. Where would you be looking for? At least here. At least there. And if you go down to a 50-minute chart to see this happen, it's textbook. 1 second. Let's see. Where were we? So manipulation, it goes through, comes back the first time, takes out intermediate liquidity on the way. You always want to see, before you trust, before I trust the trade, I want to see it take out intermediate liquidity. I will not take a trade that hasn't taken out intermediate liquidity. I want to see someone else cry before I jump in the market. Think of it this way. I want to see someone else used as a manipulation. It lowers the chance that I will be used as a manipulation. I know it sounds mean, it sounds wicked, it sounds heartless. It's just the way it goes in this business. You want someone else to have fallen into a hole, so you know there's a hole there, then you can drive around the hole. Think of it that way. Wait to see someone else in the ditch to confirm that the ditch is there, because there will be a ditch somewhere along the way. There may be several ditches, but you want to see at least one ditch to lower the chance that your jump will be into the ditch. So the first time it comes, it breaks through, it takes out the level of, it takes out the high that drove it back there, Therefore, you can trust it a little bit. So maybe you'd come out here. Remember, I told you that when it's getting to that high the first time, this is the order block at that high. You see me do this when I say come out of a trade today, right, and get back in tomorrow. Well, in this case, it happened the same day. So I'd get out here. The moment I start to see this retracement here, I'd get out. I want to see it push up, tap back in, and then reject sharply. Then I know it's alive to get to the next level. But I'm really wanting the second manipulation zone if they will come back. And the first one is then used as intermediate liquidity. So in this case here, the zones form, let's call this a Monday. I'm in the trade on Tuesday, right? I'm out the first way on Wednesday. Thursday, Friday, these are just opportunities to get back there. Market structure breaks south. I can start to take this trade the next Monday. And once it comes back here, I'm not buying this, right? I'm not buying this. Why? I bought it down there the first time and they've come back. If they've come back, they're probably going to take that as liquidity. So I'm waiting for it to get to the lower one the second time and then break market structure again. You could say that's the market structure break. You could say this one is the controlling high. Either one's fine by me. And then buy again. And you will see that this time, in fact, it comes back again. This time, it really takes off. And it blows through that original support that time and reaches for the next one. Let's see if we can find one more. Let's look at the EU. Let's see if we can find one more. Let's look at the EU. You notice I'm not too concerned about what's happening today live. I'll show you why in a second. That's why I can take the time to show you this, because I'm not expecting to get an entry today. I'm expecting today to set me up for an entry tomorrow in the live markets right now. Let's take one more. Let's see if I can find one more for you. Now, I'm warning you, when you take this on lower time frames, you will take some losses. That's fine. Just risk manage correctly. The signals aren't as reliable on a lower time frame as they are on a higher time frame, but you're going to get far more signals to help you refine your approach to see it in real time, right? Okay, let's look for one more. Perfect. Let me see. Does it come back? Okay, this one doesn't come back to the second zone. I'm trying to find you one that visits both, or that does it both ways and visits both zones. Perfect. I see it. Ladies and gentlemen, please draw your attention to this candle right here. Let's take that entire one. This candle here. There we go. So if you can see here for me, it looked like when this formed, this is a 1 hour chart now, same principle. Kieran, no, intermediate liquidity specific to all time frames. Whatever time frame you're trading, wait for intermediate liquidity to be punished. So if your reference time frame is a daily time frame, wait for a daily time frame intermediate liquidity. If your reference time frame is a 4 hour time frame, whatever time frame you are taking your reference off. Wait till you commiserate with someone on that time frame. Console someone on that time frame. Offer someone condolences on that time frame, right? Think of it this way. If the market maker is an assassin, the more bullets they shot, the less bullets they have for you. Right? I can't stress this enough. Let somebody else take the first bullet. At least if they may have multiple rounds, fine, tough. But let someone else take the first bullet. Be patient. See, this is one of the things that changed my entire approach to trading and my success. The patience to wait for someone else to cry. I guarantee you, every day, every week, every month, someone will cry. Pioneers take the first arrow. In trading, you don't want to be a pioneer. Trading is the one discipline where you don't want to take the first shot. Let somebody else cry, offer them your condolences, and then use them as a body shield to get at the assassin. Does that make sense? That's how trading works. Somebody's shooting, let someone else rush the shooter. While the shooter's trying to reload their gun, you take the shooter out. I know it sounds morbid, it sounds mean, it sounds wicked, it sounds vicious. That's just the way this marketplace works. If you can't handle that, go find something else to do. All right? And there will always be some poor sucker who cannot control his fingers. The markets are designed, the technology, the systems, the arrows, the blinking lights, everything is designed to get you to take a trade you shouldn't. Just it. So, where were we? You see that there? When that was forming, let's blow it up a little bit. When that was forming there, let's take it up all the way. Yeah. Let's take it up all the way to that high there. When that was forming, that would have looked like a bearish order block, right? You would have thought, okay, I know what's happening. Price has taken out that intermediate liquidity. The range is really from here to here, right? That has given us a discount, a premium retracement into a sweet spot, and we expect to see a drop, right? Well, wrong, because the market then reverses and see, it's coming down. It then reverses and takes it up. You see that? It then reverses and takes it up. In this case, it comes down the first time, touches it, goes further up again. This looks like real sweet confirmation, right? Because the second time, in fact, if this happens, you should have been in on this trade actually here. This rejection here, where it broke market structure. Look, it broke market structure there, right? Came back into this zone. You should have been in on this trade with a stop loss beneath here or here. Looking to get out there, running that liquidity level into this one right here. I think I actually took this trade. In hindsight, I remember taking this trade into there, or maybe even use this one here. Here. So I remember taking this particular trade from here all the way up here. However, let's get rid of the dividers. On the way back down, this zone does not hold. Why? Because there is a lower zone here that is also now a manipulation. Why has it become a manipulation? Because it was the one. If you look at this here, down here, When that candle formed, you would have thought this was heading further down, wouldn't you? But that then turned around and it blew through it the same way it blew through this one. In essence, this is manipulation zone 1. It's the first one that formed. It's 1. This is manipulation zone 2. Whichever of the two of them is 1 or 2 doesn't really matter how you call them. You take a trade when it comes to the first one, but then you expect that first one at some point, if the market still comes back to that overall region, you then treat that first one as intermediate liquidity for the second one. There it is. It comes through it, violates it, and comes to the second one. Again, you are looking for roughly halfway through the zone. In essence, if there's a reversal all the way up here, you can take it, but don't trust that as your final low. Put your stop loss there. You can only trust to put your stop loss beneath a reaction that has happened at or beneath 50%. And even then, just to be on the safe side, just put it here anyway. And then we see the real rally. Now, in this case, again, let's call this a Monday. Zone 1 formed literally on Friday night, but let's call this Monday. Hold on a quick second, guys. Sorry, just my boys again. So Monday, your first entry is Monday, but you wouldn't have gotten here Monday night. You'd have waited Tuesday. You would have missed it because you would not have been trading during Asia. So that's fine. In which case you would have missed out on this bump, but that's okay. You would have had an entry at the end of Monday night. Again, you probably wouldn't have trusted this much. But look at this. Wednesday, New York is, you see how this works? You see how this works with 1 second. Kieran's asked a question. How is this an order block? Which one are you referring to, Kieran? You mean the lower manipulation zone? You're talking about this one here? Well, when it was forming, 1 second. Let me show you this real quick. When it was forming, no, but then when it turns around, you could actually argue that this is the entire order block all the way down here. That is an order block, isn't it? This here is an order block, right? From here all the way down here is an order block. The last few bearish candles that then become a bullish move. But like I told you, I use a lot of discretion in choosing the bodies or the wicks. And in this case, sometimes bodies or the wicks. In this case, I would actually split this order block into 2 because it has a big body. It also has a big wick. So you could argue that it should be split into 2. If you drop down to a lower time frame, you see that both of these have order blocks in them. However, I get the reaction up here. So I'm getting the reaction I'm looking for at the right time of the day, New York, near 50% of the body. So I don't need this one. It's a judgment call. You learn to make them with more experience. You step in here and then you buy. So put that in mind. I'm going to bring the session to a close here. Registered students, when we do our closed session, when's our next closed forum? Let me see. When's our next closed forum? tomorrow. So we got a beginner's close session tomorrow morning. Go study this video over and over again. Tomorrow morning, I am going to, because I want you to study it and see if you can come up with some rules of how you can trade this intraday or intra-week. Tomorrow, I am going to actually give you my set of rules for this, but I want you to see if you can come up with yours in advance. And so I'm going to go through them with you and see and tweak what you come up with to correct it for correct price action, for correct institutional price action. And then for the next month, I want you to set up a demo account and I want you to be disciplined, because this is why many people do not succeed. It doesn't matter how good your system is if you cannot be disciplined to, one, wait for it, two, to follow the rules meticulously, right? And then three, to take it when you see it. Let me repeat. You've got to be disciplined to wait for that system to set up and ignore the days where you don't get a trade. Secondly, you need to be disciplined to follow the rules when they do come up, when the trade does manifest itself. Follow the rules meticulously. And then thirdly, what was the third one again? Wait for the setup, follow the rules meticulously. And then thirdly, be disciplined to take the trades when you see them. Don't be afraid. Just take them. If you lose, you lose. Fine. One, it's a demo. Two, and if when you start doing it live, it's 1%. If your system's any good, if you tested it on a demo account and it was any good first, you know that you're going to win more than you lose, or at least you're going to win as much as you lose. And if you're doing good money management, minimum 3-4 to 1, your wins will far outweigh your losses in terms of the volume you are making versus what you're losing, right? I want you to do this for a month. I don't care how much you win or lose. What I care about is, can you spot it happening in real time? So using an hour or 15-minute chart, can you spot this happening in real time? I repeat, that's the test. Because if you can spot it happening in real time on a 15-minute chart, on an hour's chart, then the next phase will be, I want you to then step it up to a daily or 4-hour, and then refine your entry down to a 1 hour, 50-minute chart. For instance, going back to GU, if you remember, I have my eye on this one here. Let me see if I find that chart, the one I used to show it. Cool. I have my eye on this here because of these two manipulation zones from months ago. I am not going to take a daily stop loss entry of, let's see, I'm not taking 100 pip stop loss. I'm just not. But I now know that I can reasonably expect, I may be wrong, I can reasonably expect some action in there, right? So I'm waiting for price to trade up to there, and then I'm going to drop down to a lower time frame and expect a 1, 2, 3, 4. So if I go to a 1 hour chart, right, that's just beneath that level there. I am highly suspicious that this is what we may see this week. I may be wrong. That's fine. If you're wrong, you're wrong. Like I said, the best kind of wrong is the one where you don't get to trade. So I have no problems. I'm not arrogant. I don't think I own the markets. I don't own them. I can't make them do what I want them to do. I can have educated theses or theory, sorry. But I have a sneaking suspicion that this high right here is setting a lot of people up for a lot of pain. I've got a sneaking suspicion that this is what we're about to see. Might not even go that high, something like this. And then a short. Doesn't have to get all the way down there. If I get short from there, I clear that level, that level, like Tucker was showing you guys yesterday. If all I do is get down here, just look at this with me, Saints. If I get from here down there, do you think that's a decent trade? If I can get a 30 pip stop loss in that region from this high down to there, that gives me about 12.8. Now, I'm not saying I'm going to take 12 to 1, but I have 12 to 1 on a 30 pip stop loss. If I can frame a 30 pip stop loss using institutional price action there, I've got 360 pips to work with. Can I interest you in some of that? But like I said, practice with it on lower time frames to be able to see it and understand how it works and what the rules are, and not making mistakes, not getting juked out, not getting manipulated, and then come in to a larger time frame. Because like I said, the higher the time frame, the more reliable the signal. This is a lot more likely to be correct because it's a daily or 4-hour than it would be on a 15-minute. Then I can drop down to a 15-minute or 1 hour, take my entry, and make my money. All right, guys, that's all for this morning. Again, I apologize for first of all, for coming on late, and then secondly, for the issues we had at the beginning. Pray for me if you're a praying person that I get through this summer holiday in my right mind, because these boys really are giving me the runaround. See you guys this evening. Talkback will be back with you this evening again at 9:15 for an exclusive, or it will be exclusively a teaching session. So there'll be very little analysis this evening, but he's going to be furthering some of the concepts. And I'm going to ask him, based on what some of you have told me in private, I'm going to ask him if he can revisit the order block system theory. Because I'm gathering that some of you are having a lot of issues understanding how to see them as they transpire in real time, and what to wait for a confirmation of, and what you can take in real time. So I'm going to ask him to do that this evening. Until then, see you tomorrow. All the best. Bye-bye. Well, see you this evening. All the best. Bye-bye.